Evaluating residential real estate markets in the U.S. is all about tracking population trends. Where are people moving? Why are they moving there? Why are they staying there? And to do that, we're going to show you a half a dozen research features that are on the web, tools that you can get access to for free. If you scroll down on this page, we've got them all laid out for you. The methodology that we use here at OwnAmerica is to look at the big picture. Every market in America is different. Every town is different. And the first thing you want to know is what has been happening with home prices. Give yourself a baseline of understanding. And for that, we're going to use Zillow.com. Zillow has some very cool features in their site, but you have to know where to look for them. So the first thing you do, if you go to the home page of Zillow.com, look for the local info tab. We've linked you directly to the local info tab from our landing page here. And what I'm going to do is I'm going to run a 10-year chart of home prices in whatever market I'm interested in. And so the first thing I want to do is choose the market. And for the sake of our case study here today, I'm going to choose Charleston, South Carolina, because I like it there. Now what you're going to see is as these charts begin to populate, there are a few. I have to change this back to home values. Sometimes when you change the city, it brings you back to the local info landing page. So click on home values. First thing you have to do is change your settings because Zillow has their home price index. I'm not a big fan of indexes because I don't want to see anything that is, for example, seasonally adjusted. I don't want to see anything that is adjusted through this complicated algorithm. I want to see just what happened. All right, just tell me what happened. So here is sale price. I'm going to change it from Zillow Home Value Index to sale price. And you can see immediately that I've got some zigzags and ups and downs. And so the home price index smoothed that out for me. I don't want it to be smoothed out. I want to know the reality. Next, you're looking at a 5-year chart here. Okay, 5-year chart tells you something. I'm not sure what it tells you. But let's change this to 10 years, which I'm of the impression that this is what it should be set for automatically because look at the context it gives you when you change the chart from 5 years to 10 years. You know, you have to stand back if you want to understand residential real estate. It moves slowly. You can't stand too close. So here what I'm looking at is 10 years ago, a housing market that had a median sale price of $161,000 that peaked, and I'm going to ignore this crazy peak back in November 07 because that was an anomaly. The peak was someplace in the 250 range right here, and it came back down again to 220. So I've gone from 160 to 220, which means I added about $60,000 to my value, even though it came down some in the recession. And so if you want to establish a percentage of how much real estate in Charleston appreciated over the last 10 years, you take the $60,000 that it appreciated and divide it by the $161,000 that it used to be, and you see that you've got a 37% appreciation over the last 10 years. So this is a fairly resilient market. Okay, they've had their hard times since 2005, but the values have pretty much hung on to those 2005 levels, which is pretty impressive. I like what I see. So the first thing is make a note of that. And by the way, you can share this stuff. Share it on Facebook, share it on Twitter, embed it in your blog. Zillow gives you a lot of ways to use this information to convey your findings to other people. So first and foremost, the market has appreciated over the last 10 years, which is not what a lot of markets around the country have done. So the first thing I want to see is what's happening with population. And for that, we're going to click on the U.S. Census. This is a really, really cool page. Government did something right here. So what I want you to do is scroll down. There's a whole bunch of different indexes on this page, but the one that I like the most, if you keep going and keep going and keep going, you're going to find apportionment data. Apportionment data allows you to hover over a state and look at the population trends over the last 10 years. Again, I don't care what happened in the last 12 months. And I certainly don't care what happened in the last 30 days. I care what happened in the last 10 years. And I can go around, I'm going to go over and hover over South Carolina, and I can see the population grew by 15.3% in that period of time. And notice the chart. If I hover this chart around, I can see, look how steep the population growth is in Georgia. How about Florida? How about Texas? 20% population growth in 10 years. And you can see the map is color-coded for the most gains are the darkest blue. Now let's go up and take a look at New York. Only a 2.1% change in population. Look at the chart. Okay? So very first thing that we look at here is tell me where people are moving, and what you're finding is Texas, Southeast U.S., some of these states in the West, and for our case study of Charleston, South Carolina, I've got some really good data here that tells me population is growing, so population looks good, and I can share this chart. The next thing I want to know is migration patterns. Okay, I'm going to go to Forbes.com for this. They have a fantastic map that shows you where people are moving, where they're coming from. So check this out. There's a newer version of this, but I don't use it because it's slow. I use the older version. I like it just fine. So the map comes up, and this is based upon IRS data. The IRS keeps track of you. Maybe that surprises you. It knows where you moved and where you came from. So if I go down and I find Charleston County, the black lines represent inbound migration and the red lines represent outbound migration. And so what I can see here is that I'm pulling population pretty strongly from New York, New Jersey, the whole metro area around New York, from DC and Virginia, from Boston, from Detroit, from Chicago, and I'm getting population from parts of Florida. I'm losing some population back up towards some of those directions. I'm losing population up to the Pacific Northwest, which it seems like everybody is, and I'm losing population to Texas, which it also seems like everybody is. So just by way of illustration, let me click on Harris County, Texas. Look at the population and migration trends coming in here. So wow, look at all this transiency, right? Pulling out of California, pulling out of New York, all the major metros, pulling out of Florida. This is all about job growth right here. Houston is losing some but gaining more population. This is a very cool chart. Again, share this map. This is information people are interested in. This helps you make the case. So now we have a sense of what the home prices have done. We also have a sense of what population is doing, and we have a sense of population moving around the country. Now I want to start figuring out why. Okay, we know what's happening. Why is it happening? So job growth is a very important aspect of that. So for that, we go to the Milken Institute. So here is the 2011 best performing cities, the 200 largest metro areas, and they also rank smaller metro areas. So I'm going to go down to South Carolina, and it's going to bring up for me the list, and it shows me that Charleston is the 11th fastest growing job growth city in America. And if I click on it, I get more details. But I don't need more details than what I have right now. I'm happy to see that Charleston is ranking very, very strong, and it gives me more detail that I can dig into here. But bottom line is that I can see that Charleston is the 11th fastest growing employment market in the country. How cool is that? So now I have a sense of job growth. Now I want to look at this rent versus buy analysis. This I find to be very interesting. Truly does a great job of this. But they always present it as why it's a good time to be a homeowner rather than a renter. I analyze it differently. I say if there's a marketplace where it is cheaper to buy than it is to rent, that indicates a positive cash flow market. Because if I buy it and it's more expensive to rent it, there's my cash flow right there. I buy it, I rent it out, I make the profit. And what they've done here is a very cool thing where they index it that anything less than 15 out of 20 on their index is a marketplace that is more affordable to buy than it is to rent. And this chart ranks them from the ones that are right on the margin, and as you go down you can see that these markets just look really good. You're talking about the further to the left your little green dot is, the better it is to buy versus rent. And I'm looking for Charleston, South Carolina on this chart. Here it is. Charleston, South Carolina shows me that it's got an affordability index of 9.9, which is well below the 15, which means it is absolutely cheaper to buy than it is to rent. All right? Again, this is something you can share, tweet, like it, etc. So I have a sense now of buy versus rent. And then lastly, I always want to take a glance at RealtyTrack to get a feel for how the distressed market is in this area. They do a great job at RealtyTrack at graphically illustrating the distressed property pipeline in any given area. We're big believers in short-term pain, long-term gain. If you can find a market that has been damaged by the foreclosure crisis, every property in that market has been damaged. You don't have to go find a foreclosure at half price to do really well. And I go into South Carolina and I can see that, again, color coding, the deeper the red, the more hard hit the market. So Charleston and South Carolina in general is kind of in the middle in terms of their foreclosure exposure. But it gives me a sense now, if I go deep into the state, I can choose Charleston County and get a feel for where that market is from the standpoint of foreclosures. I would expect that if it's a mild market in terms of the home price depreciation that we saw in the first chart, that it's going to be a fairly mild market when it comes to the foreclosure crisis. This enables me to go in and dig in deep there. So we can see home prices. We can see population growth. We can see migration patterns. We can see the best performing markets in terms of job growth. We can see where it's better to buy than to rent. And we can see what kind of foreclosure exposure these markets have. Interesting stuff. I certainly hope you think so. Post a comment. Share this on Twitter and Facebook. Tell your friends. It's a great time to invest in American housing. Thanks for watching.